A report saying the Federal Trade Commission has slapped Facebook with a $5 billion settlement over the company's Cambridge Analytica scandal in 2018, the largest fine ever imposed by the FTC against the tech company. The stock jumping into the close as it looks like the company dodged an even heftier fine. So is the worst over for Facebook? Tim?
Well, some might say this is a $5 billion slap on the wrist. Now, this was actually at the high end of all expectations. This was not a number that was early on part of, kind of the whisper numbers. So we've talked about Facebook needing to basically appeal to Washington and throw themselves accountable. The bigger issue for me is really how can Facebook begin to measure the cost to their overall business from security and from programming? And so far it's been proven to be less about sentiment towards the company. But I think this has to be seen as a victory.
Well, no, I mean, maybe. But, back in June 3rd, remember when Facebook was trading 180 and 2 trading days it went to 160 because the DOJ and the FTC were going to divide up the mega caps, the MAGAs, and see what they're going to investigate. And at least that's what was being reported at the time. And that stock went flush down. There's no reason to believe.
But isn't this a settlement?
There's no reason to believe that this settlement has to do with that. That was anti-monopolistic sort of practices. This is for the misuse of data that goes back years. So to me, I think it's really hard to take a 401 headline from the Wall Street Journal and paint it with a broad brush that this is it.
It definitely spiked up based on quote-unquote closure, but it did spike to overbought status on a relative strength indicator. It's already up 56%, and now it has another target on its back with crypto. So I think they got a lot of stuff behind them, and they have a new target in front of them. So I would say sell on the strength.
At the very least, the FTC is off their back for now.
Yeah, and well, I shouldn't say that, but they're probably laughing all the way. They're saying, and Kristen Swilinski, one of our crack producers,
yeah,
she said, isn't it just the cost of doing business? And she's in my ear, and she's right. It's the cost of doing business for them. But to Steve's point, I mean, you had the president coming down on these guys. You had Mark Cuban coming down on these guys. You had this headline, stock closes up almost 2%. And I'll say it again, I do not want to like Facebook. I still think it's going to test that high we saw last July of 224.
The head of Libra is going to the Hill next week.
But I think the Libra thing is really important because when you think about this started coming back from that 165 level once the Libra stuff started trickling out over the last month and a half or so. And you have to ask yourself what is in it for that. That's something that is not going to be in their earnings or anything for a very, very long time. So as you get to July 24th when these guys report their Q2 and they give guidance, I mean, how much of this move, 25% or 30% since early June, has to do with Libra? And I don't think you want to own it for that right now.